Welcome to the Real Estate Espresso Podcast, your morning shot of what's new in the world of real estate investing. I'm your host, Victor Menashe. Today we're looking at an interesting policy announcement out of British Columbia. The federal government, working with the province, announced a plan to purchase more than 2,000 unsold condo units from developers in the Vancouver market and convert them into affordable housing. It totals about 2,200 units with a broader financing package in the billions of dollars. This follows a similar announcement where 2,200 condo units are to be converted in Toronto. These will become rental apartments, including 550 affordable rental homes. At first glance, it looks elegant. Developers have built newly built inventory that is not selling. At the same time, households are struggling to find housing they can afford. So why not match the two problems and turn them into one solution? There is some logic to that. In Metro Vancouver, more than 2,200 newly built condos were reported as unsold and empty in 2025, with that number expected to rise further if market conditions don't improve. Pre-sales have also been weak, and that matters because lenders often require substantial pre-sale thresholds before releasing construction financing. Federal briefing material noted that in Toronto, 55% of pre-construction condo units were unsold in the first quarter of 2025, and that's creating a direct challenge for developers trying to finance new projects. But as investors, we need to look beneath the headline. The first question is price. If the government is buying inventory at a true market-clearing discount, then taxpayers are maybe acquiring housing at a lower replacement cost than building from scratch. That could make sense, but if government's trying to buy at a price that protects developer margins, then it becomes less of a housing program and more of a developer bailout. Now, the numbers I've seen suggest that there is a fairly steep discount being applied to these units. The second question is product fit. Many of the condos built during the last cycle were not designed as affordable rental housing. They were designed as investor product. These are small units, very efficient layouts, somewhat expensive finishes, high amenity costs, underground parking, condo-style operating expenses. And the product may not work for an investor betting on appreciation, but it may not also work for deeply affordable housing without an ongoing subsidy. Affordable housing is not created merely by changing the label on the door. It's created when the capital structure, the operating model, the tax treatment, the maintenance reserve, and the rent restrictions all work together. The third question is governance. Who owns these units after acquisition? Who manages them? And if they're held by the government, a nonprofit housing provider, a cooperative, or a private operator under an affordability covenant. That matters because affordable housing is not just a purchase transaction, it's a multi-year operating business. A badly managed building will not remain affordable. It'll simply become deferred maintenance with a political ribbon-cutting photo attached to it. The fourth question is market impact. If developers believe government's going to step in and buy failed inventory, then the market receives a dangerous signal. Risk should belong to the party making the decision, and if a developer builds the wrong product at the wrong price for the wrong buyer, that mistake needs to be priced into the market. That's how markets learn. But there's another side. If the market seizes up completely, good projects can die alongside bad ones. Construction jobs are lost, trades disperse, lenders will pull back, future housing supply gets canceled, and a government purchase program, if properly structured, could act like a bridge across a temporary liquidity gap. So the issue is not whether the idea is good or bad, it's how it's implemented and how it's structured. A sound program could have several guardrails. First, the purchases should be made at independently verified market clearing prices, not at pro forma prices from 3 years ago. Second, the homes should be acquired only when the operating economics support durable affordability. And third, the affordability covenant should be long-term, it should be clear, it should be enforceable, and it should be attached to the property. And then the public should be told plainly who benefits, how much subsidy is embedded, and what the alternative cost would have been to build new affordable housing from scratch. And finally, this should not become a substitute for fixing the underlying development system. The reason these projects are expensive is not just interest rates, it's the land cost, it's the development charges, the municipal delays. There's a lot of code complexity, there's a lot of taxes. In fact, almost a quarter of the cost of a new project is tied up in tax of some form. Buying unsold condos might absorb today's excess inventory. It doesn't by itself create a healthy housing production system. The market isn't saying that people don't need housing. The market is saying they can't afford the housing that was produced, and that's a different diagnosis. For developers, the message is clear. Build for the customer who can actually close. For investors, underwrite to real absorption, not wishful appreciation. And for policymakers, focus on reducing the cost of delivery, not merely recycling expensive inventory after the fact. The announcement might prove useful. It might even be necessary, but it will test whether it protects taxpayers, creates real affordability, and avoids rewarding poor underwriting. Because in real estate, as in life, every rescue program teaches the market something about behavior. As you think about that, have an awesome rest of your day. Go make some great things happen, and we'll talk to you again tomorrow.